Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Update for the week ending September 30th, 2022. Sorry I was not out last week. I trust Charlie did a good job taking care of everything, and hope that was very helpful for you. So let's get into stocks. Stocks were down across the major indices last week. The U.S. S&P Broad Market Index, the S&P 500 declined 2.88%, while the Russell 2000 was down 0.82 and NASDAQ was down 2.68. Now, overseas, the developed market index, which is the EFA, declined 1.31, while the emerging markets was down 3.25. Now, within the U.S., the best performing sectors were energy and materials, and the poorest performing sectors were utilities and technology. By style, last week, growth outperformed value. It kind of goes back and forth, which is why we have a diversified portfolio. Some G33, some Core Select, some G50, a little bit of everything. So the yield curve remains inverted as both the 2-year and the 10-year Treasury yields fell 5 basis points to end the week at 4.22 and 3.87% respectively. Now, commodities, oil gained 0.95% for the week, but posted its first quarterly loss since 2020 due to escalating concerns over a global recession and continued strength in the U.S. dollar. We're seeing that, a lot of times Europe is horrible right now. All over the place there's issues. So even though we're starting to feel it right here, it's getting pretty bad around the world right now. So let's talk about economic data. New claims for jobless benefits were 193,000 for the week ended September 24th, about 25,000 below the consensus estimate, and a similar drop from the prior month. It indicates that the job market remains very strong and generally viewed as a continued headwind against inflation reduction. Now, consumer spending for goods and services rose 0.4% in August on a month-over-month basis, slightly ahead of consensus expectations. After taking into account inflation, spending rose 0.1%, and the personal consumption price index increased 0.3%. Now, excluding food and energy, the rate preferred by the Federal Reserve, the inflation index, increased 0.6%, accelerating from 0.0 monthly rate in July. Now, here's a surprise. New home sales rose a surprising 28.8% in August versus consensus expectations for a 6.4% decline. The prior month was also revised upward on a year-over-year basis, and August sales were nearly flat. The gain was also surprisingly strong given that the interest rates ended the month at 6.7%. But there was a lot of built up, and now we're starting to see lumber prices come way down, even with the interest rates up. So you're starting to see, there's still a little demand that's starting to dissipate a little bit though too. We'll talk about home sales as well, I think in the next one. Let's talk about company news. Starbucks, which is a G50 holding, announced an 8.2% dividend increase. Yield on the new rate is 2.43. Since initiating a dividend in 2010, Starbucks board has increased its dividend each year, and shares were up 0.11% for the week. We talked about that a little bit too. Remember, we talked about how the G50, even when times are up and down, a lot of our companies in the G50 portfolio increase their dividends, and that's why we have the consistent roughly 3% yield on that to really help us regardless of what's happening in the market. Let's talk about VF Corporation, which is a G50 holding, announced cuts to the company's full-year profit and sales outlook due to weaker than anticipated results. So far this quarter, the company also established long-term financial targets, expecting EPS to grow high single digit to low double digit up for fiscal year 2027. Shares were down 16.4% for the week. And that concludes this week's market update. We thank you so much for being part of the ARA family. To contact us, you know the number, 855-756-5700, or visit our website at aradvisorsinc.com. Don't forget to visit the Facebook and YouTube page, scan the QR code for our newsletter, give it to a friend. Also, with this market volatility, if you say, Joe, I just can't stand it anymore, we've got some great indexes, some great strategies, whether it's safety or whether it's a stop loss, some buffered strategies. So if we're trying to reach out to everybody, make sure reach out to us, and be glad to sit down with you and go over and make sure we're in the right position moving forward. Okay, take care, God bless you, we'll see you again next week.